right, now welcome back onto the very interesting discussion that I had promised you earlier that you're going to have on prudent investment. Valentine is already here from Capital A, and she will be telling us more about investment. She has a diverse experience when it comes to different investments, both the startups, those that are coming up, giving advice, and having interacted with so many people into the investment or in business. So she has a very wide knowledge, and she's about to share it with us here on KUTV, Biashara Tuesday with us this morning. Valentine, thank you so much for making time for us this morning.
Thank you for having me.
How's your morning?
Fine, yeah, fine, good. We are here, trying to raise our GDP, and I'm happy to be here as an alumni. Yeah, it feels good to be back after close to 10 years.
Very interesting. Thank you so much. Now, Valentine, just to set this ball rolling, how would you introduce yourself?
I'd introduce myself, I think, as currently an investment strategist. I feel like I've been across, different phases of, business life cycles. I've worked in the early stage PE sector. I've worked in public markets where I'm back right now. So I sort of have tunnel-like vision of what the experience that comes with, businesses struggling to raise capital and those that are already in the markets, full-fledged and, with good products.
And what do you do at Capital A?
So at Capital A, I am the head of corporate advisory and sustainable investment, more or less sustainable finance. My immediate background has been in climate, so that explains the sustainable finance aspect. So what we're currently doing as Capital A is, first and foremost, we are like the leading fixed income investment bank, traders in Kenya. That sort of means we are, very well versed in creating relationships with, local investors in Kenya, and that's why they'd prefer to use us as an inroad into, the trading cycles in Kenya. Outside of that, as the head of corporate advisory, more or less tasked with mergers and acquisitions, trying to bring the private businesses that are raising capital and also more or less plugging into the main business lines in Kenya, giving them investor ready packages like financial modeling and valuation and all that, and more or less just allowing them to, through their documentation and articulation, speak the same language as investors. So on one side you have investors with capital who are looking for ways to maybe generate interest and profit, and on the other side you have people who lack capital and they are looking to grow their businesses. And in most cases you find that, given the GDP per capita in Kenya and more or less our economic situation, you find that we have very few people who have the sort of background where you'd easily access maybe 1 million, 10 million from family members. So that sort of now creates the job for people like us.
You connect the two groups together.
Yeah.
Do you have like a set target audience, or it's open?
So currently it's open. For the first time we are seeing a very interesting intersection of players from different parts of. Previously the markets have been very siloed, so you'd find people in public markets operating on their own, maybe just doing money market funds, infrastructure bonds and all that. But I'm currently seeing a lot of interactions between the private equity and VC side, which has ideally sort of been a black hole, operating on its own. You see large projects, large announcements on, this fund has invested this in this amount, but then the problem has been, with all this funding news, where are they, where do they fall along the line, because you're not seeing them in the public markets. Ideally how a business should grow should be, maybe you start off with friends, family. They say friends, family and fools, and then you transition to sort of maybe get a grant from organizations that believe in what you're doing. After that, maybe scale a bit through maybe a bank loan, because you're now able to pay higher interest rates. And then luckily, if you grow and let's say you are let's say an e-commerce platform, the more subscribers, or ideally, as the more your customer base or asset base grows, you need more capital. So you expect to see those businesses at the end of the line, which would be in capital markets, but we don't know what's happening in between here. And I think that's what most players in Kenya are trying to figure out, so that you've probably seen the Nairobi Securities Exchange has a target of 9 million, bringing on board 9 million retail investors. So that ideally is me and you now moving out of the traditional forms of investing to now being sort of betting on the other Kenyan, betting on a Kenyan business, putting your money in as equity and all that. Yeah.
Very interesting. Now, getting back to prudent investment, especially for first timers, it's a bit scary. In your view, how can someone overcome this challenge of not sure what to invest in, or not sure how to go about it, just the skepticism that comes with being a first timer when it comes to investment? How can someone deal with that?
So one thing I've noticed, even within my own, maybe from my own experience, I think we really struggle with having genuine money conversations, even from a point of how much do you earn, which, I could easily be telling you, Sylvia, let's go buy an infrastructure bond. I have $1 million, but our culture hasn't really allowed us to speak about money in a way that's not maybe one. I get it that sometimes people would want to maintain the privacy of their finances, but again, how am I going to? I could have an extra 15 or 30,000 that's an interest from a bond that I'm spending on I'm splurging on myself, but I'm not giving you the background that this is not 30,000 from my earning. Maybe this is an interest. So first and foremost, from our dinner tables, from our friendship circles, we more or less need to start having those, because ideally that's how you pick. Education is, we'll all go to class and have these fancy degrees, but education, we retain education more when it comes from a point of familiarity or a point of love. Yeah. So if you picked it up from your parents, you'd think it's something you're wearing naturally, but maybe it's something that has been honed in you since you're a child. And again, they say you're the average of 5 people. If you're around 5 people who are making prudent investments, you get to know, maybe if I borrow 10,000 from this person, you're more or less stealing from me in a way. Like I could be helping you as a friend, but if you really now understand how maybe money works and compound interest, I probably withdrew that money from my money market fund to send you. And also there's that peer level conversation that we need to have, instead of knowing the latest update on someone's travels. How about I did an investment in VUCA platform, which is the Kejani and Kejas that are the investments in real estate investments supporting young people in unis. So there's that personalizing and breaking it down and having peer-to-peer conversations. Yeah.
What would you consider to be the best form of investment, whether it's in money markets, whether it's in starting a business, whether it's in buying bonds and all that? What would you consider to be the best investments, especially both for those who are beginning and for those who are veterans in terms of business? They've already established their businesses and now they're looking for ways to diversify their investment.
So from my experience, money is very personal, and I know that even as the Kenyans, the young Kenyan population, we're really, there's this rise in awareness, and we now know about money market funds and all that, but money is a very personal issue and a very personal story. In the context, maybe I can give you an example. I could tell you, you need to. So ideally, let's look at life. You've graduated from uni, you've started out. The basic thing, or from my experience, what ideally the ideal path is, one, you want financial independence. Financial independence means you are saving, you are a bit flexible, you can deal with an emergency and all that. So that means you need to have a bit of liquidity first. Yeah. So that would mean maybe a standard number I always have in my head is like 1 million. Like, be able to bail yourself out of 1 million Kenyan shilling problem, and it could be health, it could be you've lost a job and you need runway maybe for 3-4 months, or you're building something. Even as you're building something, bills, if you maybe don't have the luxury of or a home already, you need to be taking care of your bills and all that. So you need that operational expenditure, the monthly thing that gets you up and running. Water, you need that somewhere as a standby, so that you're also able to build whatever it is you're building. You're able to concentrate at work. So that's the immediate need. The short-term needs would be maybe you want to buy a car, do a down payment for a house. What else? Maybe save for your child's education, support maybe parents or something. So that comes in the middle bucket. And then in the long term, you now want to obviously, maybe if it's building a home or finishing up payment for a home, maybe having a retirement plan, having a nice holiday home, and then also having just a pocket of money that can always allow you to move around and sort of thrive. But then again, where do you put this money? So you have all these short-term buckets, and there are also instruments that ideally a financial advisor or an investment professional is always better placed, because they have sort of like a bird's eye view of your situation. So let's say we see a lot of people who maybe will get an inheritance from parents. If I'm online telling you need to invest in Econ VUCA platform, and I'm not aware of your inheritance, you can clearly see that if your net worth is maybe 10 million and the land is worth 5 million, and I'm telling you there's this good investment, come, let's go invest in VUCA, I don't have so you're concentrated in terms of your assets. So there's that aspect of personalization where you need someone who understands, because I have myself also tried to directly invest in stocks and all that. But if you're able, to some extent, I'd advise you get an advisor who knows the different pockets of money around Kenya, transaction costs, the back and forth and all that. Yeah.
So it's supposed to be a personal thing, not a generalization that you see maybe stocks worked for someone else, maybe business worked for someone else, you want to venture in that.
No. I'll even give you another example of, let's say I'm a 30-year-old and I have 10 million, and a 70-year-old with 10 million. If you told me just generally, the Kenyan IFB bonds are making 17-21%, and I just take it as blanket advice, like, I have 10 million. It's sort of, how would I put it? Maybe under-invested, because you can see from 30 to 70, if you do have a good financial advisor who understands the stock markets, has a long-term perspective, you'll be able to probably grow that 10 million in, over 40 years, compared to, just doing a plain bond investment because someone on social media said, I have this corporate bond. On the other side, you want to look at this 70-year-old from a point of maybe they're looking at retirement, they have health issues, equities or stocks can be a bit risky, like you've seen what's happened last month, this month with tariffs and all that. So if it's someone who's looking for money that they need access to, then you can give them less risky instruments. So there is that perspective where I'm happy that the movement in Kenya is really growing. We have money market funds, which shows that people have money, but it also shows that people don't know where to put money. Yeah.
Okay, very interesting. Now let's get a little bit into sustainable investment.
Yeah.
It is something that you deal with at Capital A. In a quick reflection, is it something that is currently being implemented by most Kenyans, or it's just a theory, some big words that people just think about it and not in action?
My experience has been, if you're not in the in the fight itself, trying to figure out what sustainable finance is and moving away from, spreadsheets and on ground. Like, yeah, it's a movement. There are, large reputable banks like Standard Investment Bank, local banks that have really taken it up to speed and ensure that the central bank recently introduced something called the Kenya Green Finance Taxonomy, which is more or less a guide on the economic activities in terms of sector, so that as a bank, if I'm funding a fossil, let's say an oil company in Kenya, does this fall within, which kind of funders are we really? And if you're maybe supporting a KenGen in, a project that's in renewable energy, then you know that you're sort of like a green bank. So I'm happy that we are making progress. I know we are borrowing a lot from the Western world, but then there's always a start. And once you've maybe laid the groundwork, you're then able to localize everything that you're trying to improve.
Why is this conversation about sustainable investment and financing so relevant right now than it was before?
One, we have two sides. We have the climate issue, which I think it's something from my experience, after a lot of learning and just pushing myself to understand what the kind of environment I'm in, and to ensure that what I'm saying is articulate and relevant. I think that is the source of sustainable finance. You want to finance, one, let's say from a bank perspective, you want to finance businesses that at the bottom line are, one, serving the needs of people in a way that is not unequal, in a way that doesn't cause more damage. Because ideally right now, whether you like it or not, whether you accept there is climate risk or no climate risk, if you are let's say a real estate developer and you've been funded by a bank, the fact that there is going to be maybe the risk of flooding is a fact. Yeah. So if you haven't maybe future-proofed your building, or maybe used any form of renewable energy to support your operational expenses, at the end of the day, when you go down to the bottom line, net income, profit, it's going to reflect. So that explains the source of sustainable finance, sort of thinking in terms of how do unsustainable practices reflect in cash flows. So if it's flooding risk, you're going to my previous experience from my most recent role in climate, I think during the flooding we had some of the underlying portfolio companies close down. So if a company has closed down, it means employees are not going to work. The profits or the interest you're planning to recoup for that quarter, you're not going to get them as a fund or a fund manager. So yeah, more or less funding businesses that, one, align to our climate goals, businesses that support in the long term, income, and increase in income among low income communities, the mama mbogas. Yeah.
It's often the sustainable investment. It's often related to low returns, low incomes. Is that true, or is it just something that it's thought of?
Again, I'll give another example. You have a business in Wajir or Lodwa, and you need, let's say, I'll speak from my previous experience, like you have, maybe you're a fund manager, you funded a business that's in Turkana, you need to monitor it throughout, because we've realized you just can't give money to a business and let it, you can't give money to someone and let them think that so the business is going to blow up and be a unicorn. There's a lot of support that goes into supporting either the team, the founding members, bringing them up to par with, even just the basic work productivity tools, supporting them to understand what licenses and certificates they need on ground. So you can imagine, if you're operating from Lodwa, just getting your supplies, that already eats into someone who has direct access to maybe the local markets here in Nairobi. So yeah, it's also an area where you need to venture into with, you know, a risk mindset, because if you want to let's say address climate issues, the people who are most impacted are not in Nairobi and this other side, they're in the northern parts of Kenya. So, and if you're going to go there, it's costly. There, I think only maybe sometimes 2 flights alone a day. If you even look at it from a point of an employee missing out on a flight because of any, it's all the things that eat into the profit that eventually eat into the the returns.
Do you have examples that you can mention of opportunities in that field?
In terms of
The sustainable investment,
Yeah.
the opportunities that are there,
Yeah.
what someone can invest in or what someone can fund.
So we'll start with, anytime you think of sustainable, you think of the UN SDGs. So where you think of the pain point you want to solve. So if it's climate action, I've seen a lot of young people come up with, you know, and it's something I thought about later, like cooking in schools. Cooking in schools is, Kenya is, most of the high schools are predominantly boarding schools. And that means maybe, you know, there's cooking throughout. If you change just that small aspect from maybe, you know, fossil fuel support to transition investments like gas, so you move from traditional charcoal and all that support a school to maybe LPG. As much as LPG is still linked to, you know, the fossil fuel world, it's considered a transition fuel. You're better off using, you know, gas than charcoal. Yeah, so at a large scale, we are seeing a lot of clean cooking solutions, use of sugarcane burgers. So any type of waste, people are really thinking of how to convert the current waste. Outside of clean cooking, I think I also saw another company last year using sort of, I think, plastic and something to make cabro. So we have a lot of local players who are rethinking. I saw another one in Uganda. It's like a tile, a plastic recycling of bottles, but then in the middle there's a panel. So you have these tiles that are, I'm still not sure how it works during, you know, extreme heat, but then that still shows you that people are still looking at what we have, like looking at the pile of dirt and you know, deciding or thinking beyond you know, their classroom lessons on how they can improve.
Thinking beyond the classroom
Yeah,
lesson.
yeah.
That is important. You know, right now, everyone is thinking of investment, and very few people are thinking in that line,
Yeah.
where they're solving problems related to climate.
Yeah.
And most of them are not aware that most investors are really looking in that field of investment. Now, when it comes to this other side that is not of sustainable investment, when it comes to normal businesses,
Yeah.
where do you think is currently good opportunities, or where there is good opportunities, especially for those youths who are coming up, where they probably don't have millions.
Yeah.
Maybe someone has 10,000 and wants to invest in something. Where do you think it's the best options for people who are coming up?
I think still at how, I don't know how I'd put it, but it's also, don't just start a business. I'm also seeing this problem where people are also over obsessed with starting something, as opposed to, you know, sometimes also starting out working is, you get to have, like, it's called, I think, a frog view of, there's that person at the top who's making decisions, but when you've done, you know, the sort of climb, you become, I in my experience, I think you become a better leader. You're able to, you can relate, this person is an intern, an analyst, I know what it feels like on the first day, I know what they need. And you see, if you have that sort of very granular detail on how to build a business, how to work for someone, because you're then also going to be a better employer. Yeah, so there's my advice at first is, we are all not so lucky to have, you know, maybe 5 million or 10 million to, you know, launch a business. I learned the hard way that, you know, any form of income in any month, like, don't go a month without a source of income, because whatever it is you're getting, you can still invest it. And that's how you start. You start with 10, slowly building up what could be, your money market fund as you are, sort of graduating through the scale. Because sometimes it can also be over ambitious to, um, tell someone, you can build a business with 10,000. It can, but then there's also like the natural path of, life learning. And I know you say that outside of, there's no sustainable and unsustainable. I think that's what we are trying to pull everyone and to pull everyone into that conversation and make, because any sustainable doesn't just go into, climate stuff. It's, are you also paying maybe people well to retain them, below the minimum wage? I think the minimum wage in Kenya is 15,000. So
Is it 15?
I don't know. Yeah. Yeah. So if I think that's the stipulated for the most of the companies I've seen. So don't pay someone less than 15,200 and expect.
It is 15,200.
Yeah. So there is that where you just start slowly, learn a lot. In the green side now, there's a lot of support. There are a lot of grants. There's Kenya Climate Innovation Center always taking up applications, and sometimes it feels like, again, a classroom setting, but you're now in a setting with players who are the providers of money and looking at the young generation and thinking. Because sometimes I know at that age, sometimes you have ideas, and because you've not gotten the support or someone to bet on you, it's very easy to sway. But at most, I'd say have an income, stay steady, because you're also not going to build a business without income. That's a major struggle we are seeing among Kenyan founders. You're not going to build a good product if you don't know where your rent is coming from. So you need at least that bare minimum for you to be okay, for you to be a functional leader, a present person.
For you to be comfortable.
Yeah.
Very interesting. Now, often people say that there's this culture of save. And there's also another side where those people who have made it in terms of business, those people, we consider them comfortable in life or well off. They tell you that savings will not get you to where you want. In your opinion, do you think saving is a good way of investing, or someone should just have that money flowing?
That goes to something I think is a trade-off. Let's say you are, at least the current what's currently happening now. So let's say you want to be a content creator. You need maybe tools. You need the tools to sort of enhance your content, make you people can see you, people can hear you. There are some form of investments I think you can make in your life that will facilitate you to wherever it is you're going, over and above like chronic saving. So I think what you mean is chronic saving. So chronic saving is you're not really improving your current. You have $1 million, maybe 5 million, but maybe just a little bit advancing of your education would push you to the next level. I know the environment mostly in Africa or Kenya has been, when for most people who education hasn't worked for, there's some people who still don't believe in, the power of education. But then I'm a full believer of whenever you're able to improve yourself in a way, in an unmaterialistic way. That's how I think I've managed to, through and through, actually survive our industry. So try to know what's coming up, what's new, because the education I had 10 years ago at KU is still not the same. I'm sure what I was learning in class, maybe we were even using different, old dated models like starter. Now there's R, there's AI. So if you're not up to speed, you don't have value as a person. People want over and above. So the world is balanced between labor and capital. If you come from a rich family, you're going to have that capital and hire people. If you don't come from a rich family, you're going to offer your labor to gain capital and grow it, either as a family or as a generation, for you to now be the, generation of employer. So there's that balance where the tools that work for you. At the bare minimum, I think what I've learned is 1 plus 1 is 2. So if you're earning 100,000, it's going to be up to you to work with that 100,000 until it can get you over to the next window, or yeah.
You've mentioned a very interesting thing, or a very interesting point, that over the years you need to keep yourself updated in terms of learning. So when it comes to investment, how can investors make themselves better apart from just going to classes and that? How do they keep themselves up to speed with technology, with AI, with everything that is coming up with the current generation? How do they keep themselves at the top?
Yeah, so again, it comes back to what I said. You can't have, a good, heavy 10 million Kenyan shilling money market fund, and you have the ability to just maybe take on new. We have Microsoft, we have Amazon offering a lot of, non-degree like certifications that will help you, one, understand how to, be more productive. There are so many tools now that I think a lot of the businesses actually in Kenya are, tech. People have provided a sort of very creative tech combinations, and that's what they are selling to people, and then they'll just sit back and sell you, because people, at the end of the day, we sell convenience to people. So it's very important to, one, invest in understanding the tools, have the tools themselves. You're not going to maybe apply AI with an outdated laptop, you get it. So there's that way, getting the physical tools to help you there, and then the soft tools, which is the knowledge, improving on who you are as a person, because over and above everything, I think I've noticed the money industry is also a relationship industry. So if you're struggling in any area in life, it means your friends are not coming through for you, your family is not coming through for you, your circles, maybe not because they are unable to, but because all of you are not, pulling the weight, or yeah.
Now, as we bring this as we bring this home, what habits separate good investors and those who are not good investors?
Pretense. Like, don't invest in something you don't understand. Like, don't invest in something you don't understand. Don't pretend to understand a product, and you're out here marketing, trying to sound intelligent, but you don't really know what pulls the strings behind it. So just learn to be authentic, or even just have that mentality where I don't know, how does a money market fund? I keep on telling people it's good to have a money market fund, but you're missing out on. A money market fund is like having the buffet, you're eating, but then you don't really know what went, behind the scenes, which is good. And there's this joke where they say women are better investors, because a money market fund ideally is, you've combined maybe ABSA, SAFCOM, and a bit of, in whichever combination of short-term investments you want, you've sort of combined them. So I'd advise people to also take the bull by its horns. Just take up all these certifications like CFA and learn the language yourself, because you're not always going to have someone on call, or having a financial advisor is also, expensive as you graduate, because you have places where they charge 2.5%, and sometimes I think that 2.5% can simply be, you sitting down and just understanding what is a bond in simple terms.
And can someone really have like advices when it comes to the same, like you want to know, but sometimes you can't know alone, you need someone to hold your hand? Are there advisors when it comes to the same?
And there are also communities I'm seeing coming around. I think there's Africa's Pocket by some lady called Valentine Tenge. So bringing ladies together, in a way that's intimate, and you speak about money, your vulnerabilities and all that. So there are a lot of small pockets of financial literacy champions coming up, and which is why again I insisted, if we can all open up and have these conversations. Sometimes it could be something I've been told by my financial advisor, who I paid a large, a good sum of money, but it doesn't really reduce my wealth or anything if I pass it on to a friend or someone who doesn't have the luxury of an advisor. Yeah.
Very interesting. For people who are youths, normally I speak for youths a lot,
Yeah.
because most of them don't even know that this thing exists.
Yeah.
Most of them just move into investment blindly. Like when we were talking before and you said that you'd advise any campus student not to go back home.
Yeah.
So the back of the mind, they know that, I just need to do something. I need to put my money in something. Most of them don't have the luxury of having these mentors. Are there avenues where they can have, like, should I say cheaper advisors, or it's sort of affordable? If not physical, are there maybe classes or something that can help them move through that?
One, I think I noticed, like, later, way after graduation, one, I think sometimes our lecturers are like the door to and they should be, if they are not, to the real world. Because what you see maybe in top business schools is real industry practitioners. So you'll see a CEO who's maybe a SAFCOM CEO coming to maybe do a lecture and all that. And from a young age, looking back, I think that's when you need to sort of drop the jitters and just ask the that's what I can think right off my head, like a lecturer within a university setting. That's the immediate person. If you're doing the CPAs or whatnot, again, you have people who maybe sometimes they will know, sometimes they won't know. Number two is, now people have the luxury of social media. You can chat GPT, you can just whatever, garbage in, garbage out, what you prompt in. If it's a quality prompt, then you're going to get quality feedback on. There is the Nairobi Stock Exchange. I think if you look at their website, they have classes. Some go for as low as 2,000 bob, which I think if you sacrifice in uni, it will be worth it. A pair of shoe or one salon, whichever way, depending on how hungry you are, you can do that. But I think right now people have more resources to search, to Google. There are more networking events. There is LinkedIn, which to some people, it all depends on what you're there to do. For me, I think it has been a very good tool career-wise, in terms of knowing, that's how I get information on what's going on, signing up for events. Yeah.
Right.
And also taking part in this, I think Kenyatta University Student Associations. Yeah, so those are the ways. Like, I think we were here a few weeks back, and that's how you tap into this is someone who knows a link to an internship, and also there's actually also no growth without putting yourself out there. Yeah.
That was actually what is it, the business competition that was here the other day.
Yeah.
Very nice. Now, as we conclude, Valentine, any last word for our viewers, and what you'd advise them in terms of investment, making prudent investments, getting mentors, getting advisors, just anything in between?
Yeah. I think investment has for a very long time been like a poster child for specific group of people, but we now have a lot of resources that I believe are going to bring the low income generations now into the capital markets, whether it's in terms of education or in terms of awareness. So we expect to see people. We've already started with a large rise in money market funds, which is a good step, but I think I'd advise people to take it in their hands. If you can take up courses that will give you an individual way of learning how to manage your money, where to put your money, being a student all the time, asking, and just trying to learn all the time. Yeah, so it's a good environment right now. People are the generation of people coming are going to have more resources and more exposure compared to what we had. Yeah.
If someone wanted to be part of Capital A, whether an investor or someone looking for someone to invest in their business, what advice do you have for them?
I think they can visit our website. We are on all social media channels. We are on LinkedIn. We also have a number. They can contact us on our website. Yeah, so we are on all media channels. So there's, I think, an info at something at Capital A where they can easily reach out, and we have someone who's always on call to, get the messages.
Thank you so much, Valentine, for making
you.
time for us this morning. That was very interesting and informative at the same time. Now to our viewers back at home, this has been Prudent Investment with Valentine Tenge from Capital A. And, she'll say that it's very, very easy nowadays. You can always get everything from the comfort of your home. That is using your phone, your laptop, any gadget that you have, whether it's getting investors, whether it's getting to have the knowledge on how to invest, or getting mentors, or getting to platforms that connect you to investors. So this is Biashara Tuesday Prudent Investment. Coming up next is a discussion on financial literacy with Mary Maina, who is the financial coach at Liberty Life Assurance. And here we'll be talking about how do you manage your income? How do you balance? How do you budget? How do you, we've just talked about how to invest. Now we are going to talk about how do you manage this income that you're having. That is what is coming up next after this break.